Hey everyone, welcome to our first Finance Night Live. This will be a series of live videos where you can ask any questions you have about finance, economics, or anything really, so we can have a chat about it. I had a couple of questions from my best friend about finance and economics, and they are good questions, don't get me wrong, but I couldn't make a video to answer them, so I will take advantage of this space for responding to those questions of my best friend, and also for you to ask any questions you have about personal finance, investing, stocks, politics, and the overall market. So the first question that he asked was, how do you raise capital for let's say a startup or an entrepreneurship endeavor? So there are a couple of ways you can raise capital, but it usually depends, which is kind of a word that nobody likes, especially because of the use that lawyers and consultants have with that buzzword. But it truly does. If your startup is pretty small, you will not be able to go after rounds with angel investors or venture capital firms. If you want to, let's say, start a YouTube channel, you will not pitch that to those kind of investors. So normally you have at the beginning what we call the 3 Fs: family, friends, and fools. So if you need money to start, which is usually, for example, I needed this computer to start editing and also to start programming for my college degree in finance, and I only have like family, friends. I wouldn't be able to pull off raising capital from friends, and fools. I wouldn't like to raise capital from fools, to be honest, but thankfully my grandmother was able to give me this as a present. We made a deal that this present is 10 years of presents, of happy birthday, of birthday presents. So I still have like 5 more years of, let's say, this beautiful present to edit and make the videos that you have watched, or hopefully will watch throughout my YouTube journey. And the other way you can raise capital for any startup is to make, I don't want to say a fundraise, but you can have like a GoFundMe kind of, landing page where you have to explain what you want to do. Usually you see this with board games. There are really cool ideas of board games, and you go to GoFundMe or other, we call it crowdfunding websites, where you can take advantage of these tools to raise capital for your idea. And after that, if you have something like an app or something that may help, I don't know, the environment, there are sometimes scholarships from the government or universities where you can have that kind of money. Then if you have a really big project, then we start with the traditional finance. You can go and get a loan, which I don't recommend starting from a bank. You can also get a personal loan from, some creepy dudes that you can get loans anywhere really in any country. And also you can do some, we call it financial engineering, where you sell the future cash flow, the future money you will make for some support. So for example, if I truly believe that I will make a lot of money from this YouTube channel, I could ask somebody, a friend, and tell him, I will give you 10% of all future profit in exchange for, I don't know, $10,000 to buy gear, cameras, lights, microphones, and all of that. So that's like how you would raise capital for a startup or idea that you want to start developing. Let's see at the second question my best friend had, which was how, there you go, how to evaluate if a market is good for investment. So it really depends on the psychology that you have. So for example, I don't like fixed income markets. I am truly passionate about stocks and index funds and that kind of thing. Also, I'm not very fond of, let's say, cryptocurrencies. So first you have, what's your profile? Do I like risk? Do I avoid it? What kind of industries do I like? Personally, I like technological firms. I like companies that innovate, that help humanity. But there are people that don't really like that. For example, Warren Buffett, he's not the biggest fan of tech companies. He prefers more traditional companies like American Express, Coca-Cola, companies that he knows that you and I will keep buying from them no matter what. Most of us will keep drinking Coca-Cola in the future coming years. Also, he's a big fan of Apple. He knows that in the US, 200 million people will most likely buy iPhones every single year and iPads and MacBooks. So he likes those kind of businesses. So first you need to assess the risk, the return you look for, and also the different characteristics of the market in terms of ethics and personal beliefs that you have. After that, you have to look into the regulation. Is it a sensitive industry like tobacco or I don't know, gambling and those kind of things? Or is it more, I don't know, regular? Let's say your business manufactures tables. It's not like the biggest regulated thing compared to, I don't know, banking and finance, which is one of the most regulated industries that you can invest. So it truly depends on that, on how comfortable are you in that market. And if you are going outside the United States, you have to look into the politic scheme of things, because you wouldn't invest in, let's say, a third world country in Africa that it's in the middle of a civil war just because they are paying you 50% return every year. And also you have to take into consideration the future outlook of that market. How is it looking? Are people most likely going to keep buying the things that they are buying today? Are interest rates going to be higher, lower in that country or for that industry? So all of these things have to be considered to evaluate if your market is good or bad. Usually, for common investors or common regular people like you and I, you shouldn't invest in an industry or a market that doesn't have at least, I would say, 5 to 10 years of history. So for example, we have been hearing a lot of things about AI, and people think that AI is a 2023, 2024 invention, but actually AI has been developing for a couple of years now. So you have data about the interest and the usage people are having with AI. So you can make a rational decision about, should I invest in NVIDIA? Should I invest in this GPU manufacturer? Should I invest in this AI company? Compared to something totally new, like last year, I've seen people investing in metaverse and real estate in the cloud. So it's kind of new. It could be, useful someday, but you shouldn't even try to evaluate those kind of markets if you have no idea of what the future will look. And even if you have FOMO, which is the fear of missing out, it's better to embrace that fear and not fall into the temptation of investing just because you might get billions of dollars from a lottery win of an industry. Then the third question that he had was, how do I put projects into the stock market? Funny thing is that if your project is big enough, you don't need to, make billions of dollars to put your money into the stock market. You have different, let's say, ways of raising capital with a project. And if you are trying to, let's say, make a building, you can do what it's called securitization, which is basically creating kind of like a stock of the future money the building will make and selling that piece of ownership to investors today in order to have capital. So you can do that. Obviously, because of economies of scale, you have to consider how much will it cost to do that compared to just a regular loan or family, friends, and fools kind of things. So of course, if you are going to make a business about, I don't know, frozen yogurt, you are not going to, raise capital in the stock market. But something as big as, I don't know, a 100-story building, then you have these securitized instruments that you can take advantage. And people have this bad perception because those kind of instruments are what caused most likely the 2008 financial crisis. So people think that they are bad, but they are bad if they are used in the corruptive way they have been used by Wall Street in 2008. But it's a really cool way of raising capital for big projects that you can go and raise capital from investors all over your city, your region, your country, or even the whole world, if it's a really good idea. The fourth question was, what are the requirements to put a project into the stock market? And this works for any country. First and foremost, you have to do we call it a prospect. You have to explain as detailed as you can everything about the project, the idea, the finances, how are you going to develop, what is the time frame, the timeline that you will take to create this project, so investors can have like a pre-round of considering. And if banks see that this issue might be interesting, they will go forward. And if not, then you will not be forced to spend money and going into the stock market. You will just stop there and find other ways of raising capital. So those are the requirements. You have to be as transparent as possible with the financial regulators, the stock market, and the supervisors in order to make sure that, one, you are treating investors fairly, two, you are raising capital for something real and not a Ponzi scheme, and three, that every single player is doing its job properly. Then we have question number 5. How do I get, he said, economic security, entry into the stock market, which I guess is, how do I make sure that my money doesn't go, poof when I invest? And the thing is that people tend to not understand what stockbrokers do, because if you invest in something and the stockbroker goes bust, you will not lose your money, most likely, if you invested it. Because if you buy a share of Apple, the system in the New York Stock Exchange or the NASDAQ or any stock exchange that you have used to make that purchase says that under your name you have X amount of shares. The shares are not, let's say, they are not saved. The custody is not with the stockbroker. It's in the stock market. There's a special building where you have all the digital information about who owns what. And the only thing the stockbroker does is be the middleman, saying, Sergio wants to buy X amounts of shares, and they'll go, okay, I will sell them for this price, and then it will be like, the sale process has been completed, and that's it. So if it goes past, there will be another stockbroker that most likely the financial supervisor will tell you is now the one that you can make that communication to sell that share or keep it. So most people tend to feel that the stock market is risky in this kind of sense, but it's not actually true. It's risky because the prices can go up and down, you can lose your money because, I don't know, a business is doing fraud or the business is not doing as great as it's supposed to be doing. So in the stock market, the regulated stock market, you have this kind of safeguards. And if you have the stock market in regulated countries, for example, in the US, you have the SEC, which is the Securities and Exchange Commission that makes sure that investors are treated fairly and that everything is transparent and it works as it's supposed to. Also in the UK you have that, in Germany, in most countries really. Some are better than others. Of course, there are countries that have more probability of corruption, but overall, if you invest your money in the stock market, in the bond market, in any market other than over-the-counter or cryptocurrencies, you have, let's say, a fair sense of security that the money, if the business works as it's supposed to, then you will not lose any money for fraud, most likely. So I guess that was the question. And if you have any burning finance questions and you want to ask them, I would love to hear it from you. So staying with this topic of economic security, that's why a lot of people don't like cryptocurrencies, and you can hear that from, you know, traditional investors like Warren Buffett, because he argues that you are buying something that doesn't produce anything. So not only it's not as regulated as the stock market, but also it's not a business that works as properly. It's a ledger system, he says, that, you know, doesn't produce anything. So that's why there are different considerations in what kind of market you will invest to have as much security as you require. If you're young and, you know, don't care, even though you should, about the security that you want, then you can, you know, try different markets. I don't know. There are, you know, these kind of investments, we call it alternative investments on, I don't know, Lego sets that have been outperforming the S&P 500. But of course, you know, it's riskier because you have to buy the Lego sets and sell them, and you have to do that without any management of what we call counterparty risk, which is managed by the stock market, where you have to be sure that the person that you are buying from has the thing that you want to buy, and on the other hand, the people that is, you know, buying has the resources to pay for that thing. So those were the 5 questions that my best friend asked me, so hopefully you can watch them later. And if you have any burning questions, you can ask them. And we will have these finance night lives to respond any questions that you ask in the comments of the videos, in the posts that I create, or if a news has, you know, arrived to the markets and I would love, you know, to explain something to you, I can do that. And I would love to finish this live by explaining something that you may see in one of the latest shorts that we have created, which is how do the price control policy that one of the US presidential candidates wants to, you know, use is not really a great idea. And Milton Friedman, one of the greatest economists that we have had in history so far, explains that most of the times when the government does something in the market, it messes up everything. Most of the times, it tries to help or make the markets better, but it actually does the opposite. Always somebody loses more than the original position. So price controls do not work for controlling inflation. He argues that the only thing you can do is reduce the amount of spending, and the US government doesn't like to do that. They always like to spend more and spend more. And when you have wars like the war in Ukraine and the war in Israel, and the US is sending money, all of that money, all of that movement, all the money printing is what causes inflation, really. It's not corporations, it's not greedy CEOs raising prices, even though it could, but it's not that. And they want to change the narrative so you have a different perspective of the finance and economics that are behind the scenes. So that's the only way of handling. So if you ever have the position of talking about this with your family at the dinner table, or if you are one of the lucky ones that has exposure to policy makers, that's the only way. Truly, the only way that you can reduce prices is by reducing the spending, which is reducing the demand, or by incentivizing businesses to increase the supply. So if you live in the US and you're like, how in the world I will be able to afford $400,000 for a house when I don't make more than $70,000. I don't even make $50,000 a year. How? I'm not able even to pay the down payment. So the quickest solution for that dilemma that our generations are going to face is by increasing the supply of houses, which is not happening because people that are selling houses love to sell them at higher prices. That's how business works. So if the government found a way to incentivize people to create more and more and more houses, naturally prices would go down. So that's the solution. If you want the prices of oil to go down, you produce more. If you want the prices of houses to go down, you produce more houses. And that's the only way you can control inflation, by reducing the spending, which is not likely to happen with the current government or any government truly on any side. They love to spend money on stuff that they think is useful for the American people, but it's actually not. Or by increasing the supply of the things that need to be controlled. So if you have any other questions, I see that we have one people watching us. I would love to answer them. If not, I think this would be it for this first Finance Night Live. So I'll be waiting a couple of seconds if this beautiful person has any finance, economics, business questions that I could help with. I'm a financial analyst. I have a background in finance and data analysis, so I'm not a random dude that has read Rich Dad Poor Dad trying to give you financial advice. So if you have any question, I would love to help you with that. If not, thank you for all of those that have watched, and hopefully we will have many great finance live sessions in the future. Thank you all. I hope you have enjoyed, and see you all in the next one. Have a great weekend. Ciao, ciao.